welcome to House of Commerce. Hope you all are doing well. So in today's video, we are going to discuss about bank reconciliation statement because so far I have received many of the feedbacks and likes on the previous video which I uploaded regarding the bank reconciliation statement. So I found it very helpful to upload the video about the bank reconciliation statement. So stay tuned, watch the whole video because we have something new about the bank reconciliation statement regarding the treatments. So let us move to the video. Now here we have a question. Here we have a question that balance as per cash book is 200,000. Balance as per bank statement is 400,000. Then check issued by the customer but not presented in the bank, 200,000. Then check deposited by the company but not cleared by the bank, 100,000. Then online transfer made by a customer, 70,000. Then markup credited by the bank, 800,000. And then markup on overdraft charged by the bank is 1,000. Then dividend collected by bank on behalf of the company is 23,000. So let us discuss about what should be the treatment of all these statements. But you have to first jot down all this and then we'll move forward. Okay, so hope you have jot down the question. Now let us move to the solution that how to solve the bank reconciliation statement. Here we have unadjusted balances as per the cash book, the company's book and the bank statement, means the actual cash laying at the bank. So both of these have the difference like 2 lakh and 4 lakh. Why so? Because many of the reasons have been written down because of which both the balances are not matched. So let us see that how to treat these differences. Here we have unpresented check, 200,000. So in question it was written that the company issued a check and it is not presented into the bank of 200,000. So the time my company issued the check, it would have deducted that check from its books, but the check has not been presented into the bank because of any reason. And now it is the period and the company wants to know that why the balances are out and not being matched. So they detected one of the reasons, and that was unpresented check, the check which was issued by the company but not presented. Therefore, we have to deduct it from the bank statement so that it will be equal to the company's book, to the cash book. Then, unclear check. Unclear check means the check deposited by the company and not entered into the bank statement. Why so? Because bank has a clearing process which takes 1 or 2 days for getting the check cleared. So that's why when my company deposited that check, so I entered in my cash book, in my company's book, that the bank has been increased, but the check has not been cleared into the bank. Therefore, I have to add it myself so that I may reconcile the balances of cash book and bank statement. Then, online transfer. A customer owes me some of the money and he has transferred me online. And I did not have idea, or my accountant did not have idea about that online transfer. Therefore, the cash book and the bank reconciliation and the bank statement are not being matched. So all we have to do is to add up that check because it has been added into the bank statement. Then, markup credited by bank. Do know one thing, that bank's credit is positive. Why so? Because the cash is a liability for the bank, although it is an asset for the company, but the liability for the bank. Therefore, if anything is written that bank has credited this and that, so that means the bank has added those things. Therefore, the markup credited by bank shall be added because bank has added a markup into our account. Now, markup on overdraft. We have discussed before in our previous videos as well that overdraft is a kind of loan by the company or by the account holder from the bank. So if the bank has charged markup on overdraft, that means that we have paid the markup on loan. So the bank might have deducted those charges, those markups. Therefore, we have to deduct the same from the cash book. Then, dividend collection. Do know one thing, that dividend collection and bills payable, these are all the standing orders which are given by the company to the bank or by any of the account holder to the bank that to do some sort of works on a specified date. Therefore, my company has given the instructions to the bank that to collect the dividend on behalf of the company. So if the bank has collected the dividend and we do not know about that, so we have to add this because the same has been added into our account as well. Now, if you add up all these things and deduct the same items which are being deducted, then you'll get the adjusted balance as 300,000 on both sides. Now, let us move forward to the next step, that if only one balance is given, for example, if the cash book balance or the bank statement balance is given, so what we have to do in that case? Okay, so the second type can be, if in the question I am not being given with the bank balance and it has given me only the cash book balance, so what I have to do? I have to add up all the things which were deducted by me, like unpresented check. I issued the unpresented check to a supplier and it should have been deducted from the bank statement. But it is saying me by giving only one balance that to get to the adjusted balance of the bank. Now I have to add up the thing which has not been deducted by the bank so far. Then if I have added the unclear check means those checks which has been deposited by the company and added by the company but not added by the bank yet. So for getting on the balance, on the adjusted balance, on the reconciled balance, I have to deduct the thing which has not been added by the bank. So I will get to the adjusted balance of the bank. Like here, I've got 300,000. Now, if it does not give me the company's books balance and it has given me only the bank statement balance, so what I have to do is to deduct the things which were added by the bank. And like here, online transfer, it was added in my account by the bank. So if bank deducts this, so I'll get the balance, adjusted balance of the company. Then if the markup is credited by the bank in my account, so I have to deduct it to get to the adjusted balance of the cash book. Then markup on overdraft, it might have been deducted by the bank. Now the bank has to add it up so that we will get the adjusted balance as per cash book. Then the dividend collection, it has not been added by the company, therefore the bank has to deduct it to get to the adjusted balance as per cash book. So this was the second method where only one balance is given and you have to revise all the things in the in the opposite side so that you may get the adjusted balance of the other side. So that was all for bank reconciliation statement. We will keep on solving the questions in next videos, and the questions shall be directed by you. You will ask the questions into the comment section and then we'll entertain into our next videos. So till then, you have to support us because it's your channel.